Active Investor here, bringing you another independent analysis. This time we're taking a look at OXiGENE Incorporated, ticker symbol OXGN. Chart we have today, a 5-minute chart. Each candlestick representing 5 minutes of trading, and this entire chart is only covering what happened today, so a very intraday chart indeed. We also have the relative strength index and some moving averages to go over. But the reason why I wanted to focus on such a short chart here, just the day, what happened today, is because this thing has been in a serious downtrend for years, to be honest. It's a very, very ugly chart going back many months and years here. You can see that it's been in a downtrend for a long time. So just based off that, I wouldn't really want to hold this stock for a long time, since it's really been performing very poorly, to say it in polite terms. Now, with that said, for a shorter time frame, I think there is good potential to swing this or to day trade it. So that's why we're focusing only on the 5-minute chart and only what happened today, because the overall trend for this thing is pretty ugly. But there are some key areas of support and resistance here that we got to take a look at to see if there's a potential day trade for it. So right away, let's just take a look at where we opened. Opened right around 65 cents, closing right around 81 cents. High of the day at about $1.14. So what does that tell you guys? The fact that we had the high of the day 15 minutes into the chart. What that tells me is that we couldn't hold these levels at all. Could not hold those levels at all. So there was a lot of buying pressure. What's interesting about that, though, is the volume was still pretty low on those first 3 candles. If you take a look there, still very low volume. I'm surprised we didn't have more volume here at the open. And since the high of the day was so close to the open, normally you would see a lot of volume right at the start, and then the volume will dwindle off the rest of the day, and it'll consolidate. But that's not really what happened here. We had the high of the day, we had a really volatile open, but the volume was still pretty low. Pretty interesting, just something to keep an eye out for there. And most of the volume came in over here, about a quarter of the way through the trading period. So we had a lot of volume on that red candle, a lot of volume on this green candle, and then a lot of volume on this red candle as well. And then they kind of trailed off. Rest of the day, the volume just kind of got less and less and less. A little bit of a pop there and here, and then at the end. So it's interesting because we had that high of the day, and then we consolidated. So we almost formed what you could call a bullish flagpole. And it is kind of like a mini bullish flagpole. Normally we'd see, if it was an entire flagpole, maybe we would have consolidated up here, but we consolidated a bit lower. So it wasn't quite a flagpole, but it's like a mini flagpole, because we still saw the consolidation, and then we still saw the break to the downside here. So we have these 3 main pivot points to take a look at: 72 cents, 84.5, and $1.02. So for this run to continue, we need to stay above 72 cents, and we need to break above 84 cents. If that happens, we can look for a break of $1.02. So even swinging it from 84 to $1.02 would be a really nice swing with some pretty heavy gains. So I might keep an eye out tomorrow for a break of 84 cents. If it still looks bullish, I'll have a limit sell at right around $1. Now, that said, $1 is always mental resistance. Any sort of, $1, $5, $10, any sort of flat amount like that is mental resistance. So I might put a limit sell at around 97 cents to be safe that I get filled in case it gets denied right around $1. I wouldn't want to be stuck holding and missing an exit there with such a nice profit. So we have support at 72 cents, resistance at 84 cents, 84.5 cents rather, and finally resistance at $1.02. And we closed it right around 79 cents, so pretty much the halfway point. So it really could go either way tomorrow. If it hits 72 cents, maybe look for it to turn around and bounce off there. An entry at 72 cents and swinging it to $1.02 would be much more ideal than 84 to $1.02, but it's also more risky since 72 cents isn't guaranteed to hold. Now, I would probably prefer that entry at 84.5 than 72 cents, since if 84.5, if it breaks the upside there, you can get in around 84.5 with a relatively tight stop below these support levels. That way, if it breaks support, you get stopped out, and you get stopped out early, not all the way here at 72 cents or worse. And at the same time, you get in at 84.5 cents, and you have potential to get to $1.02. So it's a pretty good risk for reward. Keep an eye on it tomorrow. Look for it to break 84.5 cents. Look for it to stay bullish and turn into support. If it does, we can work our way up to $1.02. Now on the flip side, if it gets to 72 cents, it can still bounce off there and you can still trade it, but just be much more careful, since if 72 cents doesn't hold, you're looking at a very, very, very ugly chart indeed, and you could lose a lot of money there. So play it safe either way, but really play it safe, especially if you're trying to get that 72 cent entry. Yeah, there's not much else to say there. Taking a look at the relative strength index, we went oversold here. We went oversold here. And both oversold points were pretty much the same. That said, this oversold point wasn't from overbought, so it didn't have as much merit. So let's look for the last two oversold points from overbought here, and then it would be here. So you can see that this overbought is lower than this overbought, indicating that when we, oversold, not overbought, indicating that when we went oversold here, the buying pressure that brought us out of oversold, those buyers were willing to pay a premium over the oversold point here, which indicates that this was an uptrend. So we're still in an uptrend intraday. Downtrend overall, like I said, the months and years for this chart are pretty ugly, but on an intraday level, we're still in an uptrend. So I think that looking for that break of 84.5 cents would be the most ideal thing, since if it does actually dip to 72 cents, the entire chart is going to be a lot uglier, and we're going to be out of that oversold uptrend. We'll probably go oversold here at 72 cents, which would be a lower oversold point from where we went oversold here, which would indicate an intraday downtrend, which would mean the entire chart's a lot more ugly. So I really wouldn't want to get in at 72 cents. I would rather get in at 84.5 cents because the chart will still look good if it hits that 84.5 cent area. So you have potential plays for that. It was a great day trading OXiGEN today. I don't think I'm pronouncing that right, since they spelled OXygen pretty weird in the company name. But like I said, it was a pretty good day trade today, and for that day trade to continue tomorrow, I'm going to be watching for it to break 84.5 cents, and I'll be looking to exit at about 97 cents. Since I don't think $1.02 is the best place to exit, it's kind of a weird area there. So I'd rather take surefire gains at 97 cents than risk it for a few extra pennies. That said, a few extra pennies on a penny stock is a pretty significant move most of the time, so take it with a grain of salt. We all have our own trading strategies. That's what I'm going to be looking for tomorrow on this stock. And you know what? If it hits 72 cents and it dies, then I'm not going to touch it, and we're not going to lose any money. But that said, if we get to 84.5 cents, there's a potential play there. So keep an eye on it. Hope this video helped you guys out. Any questions, please leave a comment below. Be more than happy to take a look there, see what you guys have to say about that. And I'll catch you in the next video, next analysis. Take care.